You think you know which stocks are going to make you rich in the next 5 years? I thought the same thing until I actually sat down, dug through the real numbers, real earnings, real growth data, and what I found completely changed how I look at the market right now. Because right now in 2026, there are 7 specific stocks that are sitting right at the intersection of where technology is going and where money is flowing. And if you get in before the rest of the market fully wakes up to what's happening, the upside is massive. We're talking about the kind of gains that people look back on 10 years from now and say, I wish I had just bought that stock. So stay with me because by the end of this video, you're going to have a full breakdown of each of these 7 stocks, why they matter, and what the risks are. Now, before we get into the actual stocks, I want to share with you a little context on why I structured this list the way I did. Every single stock on this list connects to a specific technology trend that is driving real measurable value in the market today. Not future value, not projections from some analyst sitting in a glass tower. Actual revenue, actual profits, actual growth you can see on a chart right now. So, let's kick things off with stock number 7. And this one is a company that has borderline monopoly in the AI infrastructure space. Think about this for a second. Every time someone talks about AI chips, NVIDIA chips, AMD chips, they're talking about chips that are made by massive machines. And only one company in the world can really make the most advanced versions of them. That company is ASML. TSMC, which is the company that actually builds the chips that power NVIDIA's entire AI product line, cannot function without ASML's machines. So what does ASML actually do? They've pioneered something called lithography. Instead of placing physical components on a circuit board the old way, their machines use an incredibly precise laser to literally write circuit designs onto a silicon wafer using light. It sounds like science fiction, but it isn't. It's what every cutting-edge chip in the world is made with right now. And these machines are so complex, so difficult to build, that ASML essentially has no real competition at the highest level. Their newest machine costs around $400 million per unit, and the biggest chip makers in the world are lining up to buy them. ASML stock has been on a tear. It's up over 100% since 2025. Growth has slowed a little bit in 2026 due to some uncertainty around whether TSMC will pay up for the latest generation machines. But if you look at their financial health indicators, they are passing an 8 out of 9 metrics. Revenue has been growing consistently. Gross profits are climbing. If you want a pick and shovels play in AI, meaning you want to invest in the tools that make AI possible rather than the AI companies themselves, ASML is probably the single most powerful option in that category. Now, let's dive into stock number 6. The company is Celestica, ticker CLS. And let me give you a number that should stop you in your tracks. Over the past 5 years, the stock is up over 3,000%. And even with that kind of run-up, the market cap is still sitting at just under $50 billion. And their profits have been growing so fast that there may still be significant upside from here. So what does Celestica actually do? Their CEO put it simply, they design and manufacture infrastructure that enables artificial intelligence. Specifically, they focus on 3 things for data centers, including storage, computing, and networking. Think of it this way. If NVIDIA's GPUs are the brain cells of an AI system, Celestica provides everything else that makes the brain work. The memory, the connections, the infrastructure that keeps everything running. And the reason Celestica stands out in this crowded space is pure execution. Their financials back it up with strong buy ratings based on quant analysis, strong growth, strong profitability, and strong momentum. The only question mark is valuation, because this stock is priced like a growth company. And that's exactly what it is. If you believe the AI boom is real and not a bubble, and the numbers make a strong case that it is real, then Celestica's growth story makes a lot of sense. They've also recently announced a collaboration with AMD on something called the Helios Rack AI platform, which is essentially a purpose-built solution for AI data centers, combining AMD's computing power with Celestica's networking technology. That's a meaningful short-term catalyst on top of everything else. Is it risky? Yes. But so was NVIDIA 5 years ago. Let's shift now to something very different because not every great investment has to be a moonshot. Sometimes the best opportunities are hiding in plain sight. Massive established companies that the market has temporarily undervalued. Stock number 5 is Microsoft, and I know what some of you might be thinking. Microsoft, really? But hear me out because the numbers here are genuinely compelling. Microsoft's stock had a rough stretch. It went up almost 38% at one point last year before settling at around an 11% gain. There's been a lot of noise around their AI Copilot products. People complaining that Copilot isn't very useful, even memes about how bloated Windows is becoming. And honestly, some of that criticism is fair. But here's the thing about Microsoft that gets consistently overlooked in all the noise. Their B2B business, the stuff they sell to other businesses, is absolutely crushing it. Microsoft Azure, their cloud platform, grew revenue by 39% in the past year, on a business that already makes over $100 billion per year. That is not a company in trouble. That is a machine. And the valuation, Microsoft currently sits at a price-earnings ratio of 26.5. For context, Google is at 31, Apple is at 34, Meta is at 28, and Microsoft is cheaper than all of them right now. If Microsoft's valuation just caught up to Google's, not surpassed it, just matched it, that would be a 17% rise in the stock price from today's levels. And longer term, there are two things that could drive this stock significantly higher. First, their AI focus is changing. The head of their AI division is now focused specifically on building better AI models rather than pushing half-baked consumer products. That is the right move. Second, Microsoft has made a serious bet on quantum computing with their major in one chip. This chip uses a completely different architecture from traditional quantum hardware and could help solve real industrial problems in years rather than decades. That's a very long-term bet, but it's a real one backed by serious money and serious science. I think Microsoft is one of the most overlooked value plays in big tech right now. Stock number 4 is Samsung, ticker KRX. And for a company this large, the reason I'm bullish on it comes down to one very specific market: high bandwidth memory. Here's why this matters. NVIDIA's GPUs are extraordinarily powerful at processing data for AI. But if you can't feed data to those GPUs fast enough, the whole system bogs down. That's the bottleneck. And the solution is high bandwidth memory, or HBM, specialized memory chips placed physically close to the GPUs to move enormous amounts of data extremely quickly. Samsung is one of only 3 companies in the world that seriously plays in the space, which is great for investors because fewer competitors means more pricing power. Samsung just launched their HBM4 product, and they are already raising prices because demand is outpacing supply. Let me give you a sense of what that demand looks like. Amazon is expected to spend roughly $200 billion on AI infrastructure in 2026. Alphabet is around $108.5 billion, Meta is over $125, and Microsoft is near $100 billion. That is real money going to companies that make the hardware those data centers run on. And the HBM market itself is expected to grow at nearly 27% compounded annually for the next 5 years. Samsung tripled their profits in the most recent quarter. The company has been around since the 1960s, and somehow in the last year, they have grown twice as much as the previous 50 years combined. Their stock is up over 300% in the past year. Now there are risks. Samsung has significant exposure to both the US and Chinese markets, and they're based in Korea, which means any tariff, turbulence, or global instability hits them first. Also, Buying Samsung isn't as simple as opening Robinhood and searching for the ticker. They're not listed on US exchanges, but you can access the stock through exchange-traded funds. One option is EMQ, which has significant Samsung exposure, and another is EWI. The iShares MCI South Korea, which gives you exposure to Samsung. Now, let's talk quantum. And I know quantum computing sounds like something from a Marvel action movie, but the market for quantum computing is expected to grow at 32% annually and could reach $170 billion per year by 2040. That's not science fiction. That's a real market that is starting to take shape right now. Stock number 3 is International Business Machine ticker IBM. And IBM in quantum is a completely different story from IBM in AI, where frankly, they have fallen behind. In quantum computing, IBM has been building since 2019. They have more practical experience deploying real quantum systems than almost any other company. Their new quantum system 2 is modular, scalable, and connected directly to their existing cloud infrastructure. That means, if you have a laptop and an internet connection, you can run quantum code on IBM hardware today. Right now, they've also built the world's most popular quantum development framework, which has over 600,000 developers using it. That is an enormous moat, because when those developers think quantum, they think IBM. And when AI coding assistants are trained on publicly available code, their SDK is all over it. IBM has also announced a $150 billion investment over the next 5 years for quantum research and development. Long-term, their business model of combining cloud computing with consulting is really well suited to monetizing quantum as it matures. The risk, IBM, is clearly behind in AI, and the stock reflects that. It's been dropping on AI concerns. The next stock is Cloudflare stock ticker NET. And the reason this stock is on this list comes down to something called Q-Day. Q-Day is the moment when quantum computers become powerful enough to break the encryption that protects essentially everything on the internet, including financial data, government secrets, and personal information. Cloudflare already runs a massive portion of the internet's backbone. They protect websites and internet infrastructure from bad actors. And they've been preparing for post-quantum security for years. As of 2022, every website running on Cloudflare is already resistant to quantum attacks. Today, 65% of their human traffic is quantum encrypted years before Q-Day. But here's what I love most about Cloudflare beyond the quantum angle. They are genuinely one of the most innovative companies on the planet. Their CEO has been talking about AI agents reshaping the internet since before most people even understood what that meant. Their revenue in the most recent quarter reached $614 million, up 34% year over year. Their gross profits are growing even faster than their revenue, which is exactly the trajectory you want to see. They're not yet profitable by GAAP accounting standards, but their losses are shrinking every single year. The moment they cross into profitability, they become eligible for S&P 500 inclusion, which historically gives a significant boost to a stock's price. And now we come to stock number 1. And this might surprise you because it's not a tech company, it's an energy company. Constellation Energy, ticker symbol CEG. Here's why energy is suddenly one of the most interesting spaces in the market. AI data centers are consuming an enormous amount of electricity. We're talking about projections where data centers could consume more than 10% of all US electricity by 2030. And the biggest tech companies in the world, Microsoft, Meta, Amazon, Google, are all making massive commitments to power those data centers with clean energy. The problem is clean energy at that kind of scale is extremely hard to come by. Solar and wind are intermittent, and they don't run when the sun isn't shining or the wind isn't blowing. Nuclear energy is the one source of clean, stable power, one where the power is always on and can realistically meet that demand. And the number one nuclear energy company in the United States is Constellation Energy. Meta signed a 20-year deal with them last year for clean nuclear power in Illinois. Microsoft signed a contract to literally reactivate 3 Mile Island, and they're paying a premium for that power. Now, here's where it gets really interesting from an investment standpoint. Nuclear energy has a public image problem. Ever since the 3 Mile Island accident in 1997, public opinion in America has been skewed heavily against nuclear power. But the data tells a completely different story. Nuclear energy is actually the second safest form of electricity generation in the world. Right behind solar, safer than wind, vastly safer than natural gas, oil, or coal. This is a situation where public fear and market pricing are both disconnected from reality. And that gap is exactly where smart investors make money. Now, nuclear takes time to spin up. So, Constellation Energy made a brilliant short-term move at the beginning of this year. They acquired Calpine, one of the largest natural gas companies in the United States. That means in the short term, they can power data centers using natural gas capacity while the nuclear side continues to expand. 2 revenue streams, one short-term and one long-term. That's a really smart position to be in right now. That's the full list. But if you believe these 7 stocks and the 7 reasons why I think the next 5 to 10 years are going to create extraordinary wealth, this makes it a great way to get rich without getting lucky. And if you want to see what else I'm buying to get rich without getting lucky, consider checking out my next video. Thanks for watching, and until next time, this is the X-Invest Hunter. My name is Martin, reminding you that the best investment you can make is in you, and that you only need to be right one time to change your life.